move lower in technology in the NASDAQ is nothing short of stunning. You take a look, throw it back up, guys, because we're at the lows of the day for the NASDAQ. Yes, we're at the lows of the day for the overall market, too. And it's a loss of nearly 1,200 points for the Dow Jones Industrial Average. But what's happening in the NASDAQ is a stunner. Names like Microsoft, down almost $15. It's a loss of 5%. Look at Apple, for example. Some of the very stocks that Josh said yesterday are the ones that need to hold up, the ones you need to watch closer than everything else to find out if the rally had legs. Here's exactly the story. Apple's down 5%. So we're approaching some of those levels that were key lines in the sand, Pete. What are you watching today most specifically?
Well, I think those names obviously are the ones that are going to attract our attention right away. I think the reality is this is a very solid, just like we've seen when we've had these big moves to the upside, everybody seems to participate. We see the same thing on these moves to the downside. Seems like everywhere they're participating. Energy was the one area that we had a little bit of strength early on as the price of crude was up there at 110. But other than that, it literally is just everybody, to Josh's point, it's almost as if they're like, you know what, I'm tapping out, I'm selling, and I'm putting my palms to the outside. And that's what it feels like right now. We started to see that momentum just in the first hour of trade, and then it even accelerated even more so. When we're looking at the Dow down 1,100 points, shoot, last Friday we were down, 935 points, and then all of a sudden we bounced back yesterday with a 920-point rally. This is a wild time. We had a 36 volatility index measurement when we were looking at Monday. Then we got underneath 30 in a hurry. Then yesterday we got down towards 25, and here we are right back there towards 32 on the volatility index. So it gives you an idea. This is John and I always bring this up. The velocity of the move is as important as almost anything.
Asia are just opening for their day. Let's get to Emily Tan in CNBC's Hong Kong newsroom with an early read. Emily.
Brian, good to see you. And we have Asian markets trading now for about close to 20 minutes for Friday trade, and we're playing catch up in Japan after being shut for most of this week. We're looking at the Nikkei, and it is traded down 0.5%, so relatively unscathed compared to what we saw in the U.S. overnight. This is the first chance to react to the Fed rate hike, with the Fed BOJ monetary policy divergence hurting the JPY. The yen trading north of 130. Some inflation data out in the last hour showing Tokyo area April CPI up 2.5% year over year, core CPI up 1.9%. Those numbers at 7-year highs. Looking over at Korean markets, also coming back from a holiday yesterday, the Kospi is traded down. We're off about 1.25%. The Korean won taking a hit against the dollar in a flight to safety. Korean Air posting record operating profit in Q1 on increased cargo deals. Profit surging more than 500% to $429 million. That's compared to a loss in the year ago. The airline focused on cargo contracts transporting high-end products like semiconductors, batteries, and COVID-19 kits, which helped prop up the earnings. Chinese and Hong Kong markets join the trading day in the next hour. That's a look at Asia. Back to you now.
Welcome back to Yahoo Finance Live, everyone. Continuing our coverage of the Fed decision announced yesterday, 50 basis point rate hike, the largest since 2000. Joining us now to dive into what this decision means for the market.
Guys, and I'm sharing some of this because you need to get an overall feel of the market. My over 10,000 subscribers of the channel, I want you guys to understand what's actually going on and why the crypto's crashing. It's not just crashing the crash. There's a reason why it's happening. The Asian markets are getting thrashed right now. I'm listening to it behind me. I don't know if you guys can hear me on my TV. But every single stock in the Asian markets are down. Every one. They're making a huge deal. It's a big deal they're talking about. Are the Asian markets starting to capitulate right now? Their Asian markets are trying to talk about 75 basis point hikes where they're at now. And it's pretty crazy because I always listen to it. And listening to it in the background, I'm like, holy shit, it might be a rough day tomorrow in the stock market. Like, every single stock in the Asian exchange is down, according to them right now on the TV. And it was down better than 2%, 2.5% already. And their trading just started not too long ago. So, and they're talking about capitulation and all this other stuff that might be starting to happen. And they're getting that nervous tone. And it's why I'm starting to share all of this. So we need to get an overall scheme. So, when you're here, we avoid the big drops because we understand the bigger picture. I'm not going to say I'm 100 steps ahead of everybody, but I'm a few steps ahead. Of all the other YouTubers. I don't have an agenda. And I understand the charts. And when you understand the charts and you understand the bigger picture, you can get out of the way.
It's his Truist Chief Market Strategist, Keith Lerner. Keith, great to have you here with us this morning. Help us break this down even further as we consider, at this point in time, how far behind inflation the Fed is and the correction action that they're looking to take.
Well, first, happy Cinco de Mayo. Great to be with you again this morning. Yes, an important day, right? Listen, I do think the Fed's somewhat behind the curve, but I think really what happened yesterday is that sentiment became so one-sided, really concerned about an overly hawkish Fed, and a little bit of good news went a long way in Powell basically saying that 75 basis points isn't under current consideration. I still think that the debate about inflation peaking and how quickly it will come down will inject volatility, but at least on a short-term basis, even though we're giving back some today, I think this rally that we've seen has a bit further to go because investors were caught so offsides heading into that meeting.
Keith, it's so fascinating to me, the reaction to the market in the markets to this, because there's this real vacillation here between the market wanting the Fed to be hawkish and not wanting them to be hawkish, being worried about inflation and being worried about economic growth. And so what can the Fed do going forward now to please the market? Is it 50 basis points in the next few meetings? Is it slowing things down even and not raising as much if people are so worried about economic growth?
I think the most important thing the Fed can do is to remain flexible. If you remember back in the fall of 2018, what the market got concerned about, which led to almost a 20% correction, was that they thought the Fed was on autopilot. What the market wants to see is that the Fed will adjust and adapt to the data. And Powell left himself enough flexibility in order to do that yesterday. And I think that's why the market, liked it, because, there was so much discussion about 75 basis points, and he brought that down. At the same time, if the inflation trends don't improve, likely we'll start to ramp that up again. But again, offering that flexibility is what really provided some comfort for the overall market yesterday. But again, I think this is still very complicated, and he mentioned as much yesterday.
Keith, tell us that in light of what the Fed said yesterday, this tech stock correction is over and we can all go out and drink some tequila tonight.
I'll meet you for some tequila if you'll fly me up tonight, Brian. But listen, I think the context is we still think we're in this broader, choppy range. I think this inflation question and the Fed will continue to inject volatility. We don't think we're zipping back to new highs, but we do think we were at the lower end of the range. And because sentiment was so one-sided, we put out something on last Friday saying that, who brought the beers out? Because we had the most negative sentiment we've seen in the market since really March of 2009 on some measures. And I think because sentiment was so low and depressed that we could have some more room, say the next few weeks, maybe on the S&P we're around 4,300 today. Maybe we can get to like 4,450, 4,500. But then I think there's going to be somewhat of a cap. So we're still in a broader trading range, but short term, I do think there's some upside in some of these oversold moves, even in tech, which longer term we're still mixed on.
You downgraded your views on stocks in April, Keith. Are you upgrading them today?
No, we downgraded them in early April, and after that initial call, stocks dropped about 7%. Or we downgraded them to neutral. So it's not like we have become big bears, but we're.
Good evening, 9:41 p.m. Eastern Standard Time. So, I wanted you guys to see as I'm showing you the whole market. So I can't help that. This has just happened to be playing behind me. So you guys can see, and I know it's a little loud, but I want you guys to see how red the market is in Asia. Look at this. So we're going to have a problem here. Down 2.32% in the Hang Seng. Down 3.45% the ASAS Tech. Listen to this. It's tanking. Their markets are tanking right now in Asia. So it could be a brutal start tomorrow. XRP Future Millionaire with some breaking news. The Asian markets are tanking. I showed you every reason why things are bad in our markets. I showed you a few clips. But this is the breaking news. I just wanted you to see that. But the Asian markets are tanking. And you guys needed to see that. We're going to do this update real quick because we do have a little bit of a small run-up with XRP. And I mean small when I say it. So I want to thank everybody for tuning in. Sorry, my fucking head is like... So I want to thank everybody for tuning in. XRP right now. Let me turn this down in the background. But I wanted you guys to see the Asian markets because they're getting obliterated right now. So XRP, I'm looking at a 56.5, and right now we might have run up here in the 30-minute volumeless run up at that. Big wick pullbacks, that's a sign of disaster. Likely in this 30-minute, we will cap any upside before we can break 61.548, which will tell you we're probably going to come down under the 20-day. So that is seriously what it looks like is happening. I'm fascinated by the Asian markets because I've been listening to them in the background, and I figured that was a creative way to get you guys in on it because I waited. So you guys might have heard in the beginning when I was doing the XRP Future Millionaire, I paused it because it went to a commercial and I knew it was going to, I got it like clockwork in my head when it goes to the roundabout. So I knew it was going to do that opening to show you how red the market was because they do it every like 15 minutes. They do that exact rundown. So I like watching the Asian markets because I can't see it around here in most places, but on Samsung TV, because I don't have cable, that shit's free. So I bought a Samsung TV to have the Samsung Live with my Wi-Fi, and that's free with it. So the more you know. So that's what I'm looking at with XRP. I really am. And while you guys can see me, I want to thank each and every one of you because I acknowledge without you guys, I couldn't spread the message. And without the over 10,000 of you that are following me, which I still can't believe I have that many subscribers, this wouldn't be possible. I really want to get as many members of the army as I can in the Telegram. The more numbers we have, the more strength we have, the more unity we have, the stronger. And the more eyes we have, the more things we can see. So, and I want more people to understand how Lobster works. I'm up $4,000 this week in Lobster. Just buying up the assets, advancing my position. And now I can let this play out. And the more money I can make on Lobster, the more money I can put into play when XRP, XLM, the ISO coins sink. I'm trying to build a huge portfolio. But obviously there's kinks in the armor sometimes, but right now I've been on a nice little run. If you join Tom's Army for $9.99 a month, you can join our Lobster group. It's not mine, I don't run it, but you can join it and learn. I'm just one of the admins in it. I am not the runner or the owner of it. So just consider that. So that's what I'm looking at with XRP. XLM, we have an M topping reversal, it looks like, and if this is a continuation, we could have a slight pull up here. I mean, we could. I don't see any reason why it couldn't come up here and retest here, but with the way the market is with the Asian markets, if at any point you see us break down here, it's a big problem. Especially if you see us break right here at 16.7. We're going to come down to the trend line, which is at 15 cents approximately, 15.1, and then DGB, and I got to go. My son's about to go to bed, and it's raining outside, so I'm not going to be able to walk him, and we're going to have to take, I'm going to brock him real quick. So then this, we'll probably be capped on DGB right here at 1878. I'm looking for us to come down and not only break past these numbers right here, 1770 and 1730. I expect that to be broken here at some point in the short term, and us come down and retest this 1275. I just feel that. Make sure that like button, hit that motherfucking like button. I can see you. I can see all of you. Don't you disappoint me. And then if you want some merch, if you want to support Tom's Army, walk around with my merch on you. Oh yes, it would be fantastic. Look at the store below. It's visible.